In this week's Robinhood breakdown, Hood is out here pretending to be calm while absolutely not being calm. Welcome back to Fintech Spy, where we don't just trade the volatility. We zoom in on it, overanalyze it, draw 3 different fib levels, argue with ourselves about risk management, and then make fun of the whole thing. If you're new here, hit that subscribe button for more chaotic Fintech breakdowns, terrible market analogies, and occasionally accurate memes. Let's hop right into Hood. Quick reminder, I am not a financial advisor. This is not financial advice. If you're making real trades based on a parody segment, you probably shouldn't be trading. This show exists purely for entertainment, education, and the shared coping mechanism of watching candlesticks together while pretending we're emotionally stable. Let's start with the weekly chart, our medium-term view. On the weekly chart, this candle looks like it can't decide if it wants to be bullish, bearish, or just pure chaos. It's got a tiny little body and a tall wick, like the market spent the whole weekday trading inside the same range and then just shrugged at the close. The wild part is volume. It's already back at what we saw over the previous 2 weeks. That tells you people are absolutely trading this thing, even if the final weekly candle looks like indecision cosplay. Under the hood, you've got shorts trying to keep it capped, dip buyers trying to prove they still exist, and scalpers living their best unprofitable life inside every intraday move. The one big concern on this time frame is the MACD. Those lines are drifting farther apart, which is not what you want to see if you're hoping for a clean trend reversal. It's basically the market saying, I hear your bullish thesis, I'm just not moved yet. The hopeful signal is stock RSI starting to curl back up from lower levels, hinting that momentum might be trying to turn even while MACD is still lagging. So medium term, Hood looks like a name that's very actively traded but still waiting for a clear verdict. The weekly candle is less breakout, and more, the jury is still out, but everyone keeps yelling anyway. Zooming into the daily chart, our short-term view. On the daily chart, Hood is playing full-on whack-a-mole with price gaps. You get one gap filled with a nice green hammer, and just when you feel good about that little win, the chart casually opens up a fresh hole somewhere else to remind you who's in charge. We've had these back-to-back moments where the price patches one imbalance only to leave another one for future you to stress about. It's like the chart is running a side quest called emotional damage maintenance while pretending to trend. The really interesting part is the stock RSI. Even as you're seeing red candles, that oscillator is still drifting up toward overbought instead of collapsing. That combination, soft selling on price but strength building in momentum, can mean one of 2 things. Either the move down is losing power, or the market is winding the rubber band for one last dramatic swing. Best case for the rest of the week, we get a flip of that behavior. More green candles as stock RSI gently descends back toward neutral, showing price can hold up even while momentum cools off. Worst case, stock RSI tops out and price decides to sink back down with it in the most disrespectful way possible. Either way, the daily chart is telling you this is not a chill swing trade environment. It's short-term trader country. Next up, the 4-hour chart, our intraday view. On the 4-hour chart, you get the zoomed-in, extra chaotic version of that daily story. It's still the same game of whack-a-mole, gaps getting poked at, levels getting tested, but you can actually see the individual emotional breakdowns candle by candle. The good news here is that RSI on the 4-hour is already making its way back toward neutral instead of staying pinned at the extremes. That suggests some of the most aggressive selling pressure has already cooled off. At the same time, MACD is starting to drift back toward the zero line, which is often what you see when a move is running out of trend energy and preparing either for a reset or a reversal. Put together, it looks less like a fresh, start the downtrend leg, and more like the market trying to rip the band-aid off. Flush the weak hands, shake out the late longs and lazy shorts, and see who's actually serious about holding Hood through the next move. If this stabilization holds, the 4-hour becomes the place where a real base can form. If it doesn't, we just get another round of fast candles and faster coping. Let's talk options, because nothing says emotional damage like weekly contracts. Looking at the January 9th options chain, you can see the psychology shift in real time. A lot of the heavy put positioning has started to cool off, and more traders are wandering over to the call side like, okay, maybe this thing doesn't die immediately. On the put side, the main concentration is around that 115 area with a decent chunk of contracts parked there. That's your classic. If we go down here, I at least want to get paid for the pain level. It's not fully abandoned, but it's not the only story anymore. Over on the calls, you can see the real optimism, or delusion, depending on your mood, lighting up around 118, 120, 123, and especially 125, where the biggest pile sits. That cluster is basically a group chant. Just send it a little bit higher so I can screenshot the gain and pretend this was the plan the whole time. As usual, most of these contracts will end up as very generous donations to market makers. But while they're alive, they paint a pretty clear picture. The chain is leaning away from pure downside fear and more toward, if Hood decides to squeeze or drift up, I at least want a ticket to the show. So what's the outlook from here for Hood? For Hood traders, this setup feels like the market is trying very hard to pretend everything is normal while quietly stress testing everyone's conviction. The weekly shows heavy participation with no clear verdict. The daily is playing gap whack-a-mole, and the 4-hour looks like it's either building a base or winding up for one more rug pull just to keep things spicy. If buyers can hold the line while those intraday indicators drift back toward neutral, Hood has room to turn this into a slow grind higher instead of a sharp breakdown. If not, we're right back into the emotional damage speedrun meta that this stock knows all too well. Either way, it's less about predicting the next candle and more about surviving the personality of this ticker. If you agree, disagree, or think Hood is just coiling for the next meme-fueled comeback, drop a comment and we'll spy on it next time. If this whole chart looks like emotional damage drawn in candlestick form, tell us your coping strategy below: coffee, memes, or pure denial. And if there's another ticker you want roasted on this channel, throw it down below and we'll put it under the Fintech spy microscope. No guarantees on price targets, but we will provide world-class over-analysis and high-quality sarcasm.